Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York, first day of March 2018, and this is the Daily Report for gold and silver. After trading under tremendous pressure overseas as well as the morning session in New York, we had a substantial recovery with gold closing up about 20 cents on the day at 13.1810, silver up about 8 cents at 16.49. The dollar staged some downside moves, trading to 90.22, and that's all in light of a U.S. equities markets under the third day of dramatic pressure, with the Dow Jones Industrial Average closing down about 420 points at 24,608. Bitcoin futures were higher today, closing at 10,950 and 10,970, approximately a 400-point gain on the day in Bitcoin futures. Traders, I do want to start today's show off by looking at the Dow Jones Industrial Average, now in its third day of dramatic decline. Of course, the selling began on Tuesday, and this following a testimony by the new Fed chairman. That took the market dramatically lower. Yesterday's activity actually caused some chart damage as pricing plunged below the 50-day moving average and closed below the 50-day moving average. And today, we currently are looking at a Dow down approximately 424 points, back below 25,000, and this in response to statements made by Trump that he will be proposing a tariff on steel of 25% and aluminum of 10%. That, of course, sent gyrations through the entire financial markets, but I wanted us to look at the U.S. equities markets so we can put this in context of what we witnessed in the precious metals markets today. And the way the trading unfolded today in the precious metals was an impressive and decisive recovery in both gold and silver, and a very strong sell-off in platinum and palladium, which did not recover as of the time of this recording. First, to gold. Gold is currently trading off by about 50 cents at 13.1740. And while on the surface that might not seem to be an impressive price change for us to really look at, we have to consider the dynamics of today's trading, and specifically the lows achieved in overseas trading as well as trading this morning in New York. Gold traded to an intraday low of 1303.60, which is within a couple of dollars of our 50% retracement, our first target in this current sell-off at 1302. What is most impressive is the way that once gold pricing did trade under this kind of dramatic pressure, down about $12 or $13 on the day, we saw a decisive and quick recovery. You can see that by virtue of this long tail on our daily candlestick chart and this narrow body, which defines the price point that it opened at and where it is currently trading as we go into the close of the afternoon session. You can really see how gold recovered by converting our daily into a 720-minute chart, because what that does is it divides the market into two distinct sessions, these last two candlesticks both being trading that occurred today. We can see that for the first part of today's trading activity, which is a component of trading overseas last night, we did trade under pressure and close near the lows as this market traded to approximately 1311 on the low. It then opened at this price point and then actually traded lower through the New York session. However, there was a quick recovery, and in terms of the last half of trading, it closed fractionally above where it opened at. However, although the recovery was quite impressive in terms of a technical confirmation that we have concluded this short correction, which began roughly at 1365, trading down to about 1300, is an effective close above the current 50-day moving average, which is where pricing has traded and closed below over the last 3 days, which currently resides at 1323.20. Until that point, I have to remain cautiously neutral to bearish, and only a close above that particular price point would be the first technical indication that we have seen a conclusion to the current correction. we still could challenge these lows. And if these lows hold, that would be significant because, as we talked about at the beginning of the week, really what we were looking for once we saw this market break below the support line on Tuesday was some sort of an A, B, C correction. And this would be the first target that I believed it could achieve. If we have a continuation, we could track as low as the 61.8% retracement. That would be around 1286. But today's activity suggests that we might be looking at the conclusion of this current correction. And trader, silver has certainly been trading to a different drummer, so to speak. We talked about the fact that we had a defined compression triangle created from the series of lower highs as well as the series of higher lows. We had a defined break below that, and for the last 3 trading days have traded well below the former support line. And traders, although we do not typically cover platinum and palladium, they are coming within $15 of each other in terms of price point, both selling off pretty dramatically, and neither of these precious white metals recovering to the degree that we saw gold and silver recovered today. Platinum, for example, closed off about 2%, a loss of just shy of $20 at $968.60. We can see that although it did trade to a low below 960, it did manage to recover slightly, closing at about the midpoint of the range. Even more interesting is how we saw palladium trade today. Dropped over 5%, a $55 decline, closing at $982.25. It closed under more pressure. This obviously in response to the proposal for a steel tariff, because that, of course, would affect the automobile industry, and palladium is used so prolifically in catalytic converters and other electronic components that go into automobiles. So we did see the market really sell off and close very near the lows of the day. And traders, today we witnessed Bitcoin futures staging a moderate upside move, gaining 4+%, $460, closing just shy of 11,000 at 10,990. Most impressive was the fact that over the last couple of days, we saw that pricing was really mired in a deeply narrow and defined range. We closed dramatically above that point. Our target at this point remains a solid $11,000 to $12,000, and that, of course, is based upon these recent highs. I certainly think that the selling pressure that was evident going into the beginning of February is obviously over. Also, I believe that the small, shallow decline is obviously over, and am looking for higher pricing over the next couple of weeks in Bitcoin futures as well as Bitcoin Cash. Inasmuch as today's report looked at the technical repercussions of what we saw in gold and silver, it was all about the fundamentals and a statement made by President Trump, a proposal to implement tariffs on steel and aluminum. Now, if that actually came to pass, it would create a trade war, and a trade war would have a dramatic impact on inflation, and inflation, of course, is very bullish for the precious metals. And that is the primary fundamental reason that we saw today's recovery. Whether or not that will continue has a lot to do with whether or not this recent proposal comes into fruition, or, like many of President Trump's proposal, moves to the wayside. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.